Yep. So as I mentioned, this is just basically a real beginner, just get you familiar. I've got some tips and tricks. And some of you veterans, please, if you've got anything that you want to share, any ideas that you have, I'd love the input. So I've been in this business a long time, but by no means do I know everything. So what we're going to cover today, we're going to cover where mortgage rates come from, the 4 C's of underwriting, 4 agency programs, specialty programs, very basic primer on condominiums, pre-approvals versus pre-qualifications, and tips to make your life easier. Okay, so where do mortgage rates come from? All right, so all mortgage rates are based on MBS, or mortgage-backed securities, or mortgage bonds that are traded on the market daily, also the 10-year treasury. And that's what we're seeing. So we're seeing some money going into a 10-year treasury, and it's causing the mortgage rates to go up. And it's happening very, very quickly. I know that's not what you really want to hear. Maybe you do. Some realtors are under the thought process that when mortgage rates drop, there's too many refinances and people, don't move. I'm under the thought process that with a lower mortgage rate, people can move and can afford more. So just depends on your mindset. But yes, rates are going up, and they're going up fairly quickly. Just so you're aware, MSHDA rates are set by MSHDA and not by the market. Okay, so the rates that lenders charge are determined by and large by their cost of doing business and their cost of borrowing. So Lake Michigan Credit Union, our rates are very, very, very competitive. We just are, we cut the costs, and our fees are very, very low. All lenders will offer what we call a par rate in the industry, and it's a 0 point, basically. I try to quote a 0 point rate all the time. And then I let that individual know, by the way, that's with 0 points. But if you pay points, you can actually reduce the rate. If you need money to cover some of your closing costs in a lender credit, that will actually increase your rate. When you see advertised lower rates, typically they're offset by higher lender fees. They got to cover that rate somehow, and they typically will cover that in a higher fee.
And another thing, Dana, don't they a lot of times add points in that when they do that, when they advertise like that?
Oh yeah. Yep, they're charging you points to get that rate. And it's funny, people don't realize until they get like a loan estimate, all of a sudden the quote of $2,200 or whatever has gone up to $8,000 or $9,000, or the no fee is the cost. They've rolled it into the mortgage amount, so it looks like they're not bringing any money to closing. So there's slimy loan officers out there and slimy companies, but so just know that when I quote a rate, is typically 0 points, or as close to 0 as possible.
Can I ask a question?
Sure.
Are you giving them actual paperwork with the rates, like with what you're quoting as an estimate? Or do you quote them verbally?
I have to quote verbally, and I have to tell them that rates change daily, sometimes 2 and 3 times a day. I'll put it in writing if they'd like, but that I put that verbiage in there.
Yeah.
Also, because of rising rates, I've now added a little sentence to my pre-approval letter, which I never did before. The rate indicated on the pre-approval letter is only indicative of what the rate was at the time and date of this letter. And the rate is not locked in. We have to protect ourselves.
Right. How bad are the rates going up?
Well, I was quoting 2.75 about a month ago, and now I'm at 3 1/8.
Wow. Okay.
And for someone that's got a hefty mortgage, that difference is $300-400 a month. That can make a big, we're talking a jumbo mortgage, but still that's a lot of money. you know, so.
Even on 500 probably.
Yep. So what drives rates? Well, bond traders buy and sell bonds based on market expectations and their need for a particular investment yield on the bond. When we say that bonds hate inflation, when traders expect inflation, they will drive up the yield, the rate. Here's what's happening right now to offset future higher prices. See? So bonds hate inflation when traders expect inflation, which I don't know about you, but I'm experiencing inflation. And everything I'm buying and I am paying more than I did before, like it or not. I'm not blaming anyone. It's just what's happening in the market. So rates are following that. Inflation fears are caused by the economy heating up. Good news on Main Street is bad news for bonds. So stock market volatility will also affect bonds, but we're not seeing that so connected recently. Typically, in a normal rate environment, when the stock market is happy, rates go up. When the stock market is not doing well, rates drop. Reason is money's coming into one and going into the other. So one offsets the other. We're not seeing that as much. We're seeing stock market volatility go up. I mean, stock market, the assets going up, the prices going up, the valuation going up, but we were seeing rates go down. So that was because of the Fed is buying mortgage-backed securities. So they're trying to artificially keep the rates low. There's probably too much information for you guys, but just so you know what we kind of look at every day. You can see this is a chart of bond pricing over 1 month. You can just see the volatility. That's why I have to tell people, yeah, if you're not locking in, I can't guarantee that rate for you. All right, now the 4 C's of underwriting. They're credit, cash, collateral, and capacity. Now credit, it's just what it is. Pull a credit report, and it's a tri-merge. Experian, Equifax, and TransUnion. So it's all 3 bureaus. I use the middle score of the 3. And of course, the credit is the statistical prediction of a borrower's future payment likelihood. It's an algorithm. I have to tell you, it's so funny how people think that the mistaken belief is if I carry a balance on my credit card, that's going to make my credit score go up. That is false, false, false. The people that have 800 credit scores never carry credit card balances. They pay them off in full every month.
Yep. Yep.
Yep.
What about canceling credit cards? Like say you have one you hardly ever use.
That can actually negatively impact your credit score.
That's what I thought. Yeah, I've been holding on to one just because of that.
Me too. I've had it for a long time.
I agree with Cheryl. I have credit cards over the years that I don't use. It's just better off just to keep it and just with a 0 balance forever.
Yes.
Okay.
Yes.
Yeah, the biggest problem is people go in a TJ Maxx or whatever and they say, oh, you can get 10% off today if you open a check. Oh my God, I tell people all the time, that's the worst thing you can do. You only need 2 cards. I have one for fun, one for work, and keep it simple.
Yep.
Pay it off.
That's right. And then of course, you and I both know that credit scores are used to determine the product eligibility, the down payment requirements, and the interest rates. Of course, people with the best credit get the best rates. People with the best credit are eligible to put less down. People with the best credit are allowed to get into products that perhaps people with lower credit could never have access to. All right, so now cash. Well, cash is made up of 2 components: cash used for the transaction and the amount of cash after the closing, which is what we call reserves. Underwriters love reserves. They love them. Fannie and Freddie love reserves. And so if I have a borrower maybe just kind of teetering, maybe my debt to income ratio is a little tight, maybe my cash to close, man, is leaving them with almost nothing. Maybe their credit isn't stellar, but they qualify. What I will ask for is maybe a retirement account or 401k. And I'll tell the client, I'm not going to tap into this money. That is not my intention. My intention is to show the underwriter that you have reserves. They love it. And typically, when they understand that, they very willingly supply me with that retirement account, that 401k, and that thing flies right through underwriting. Collateral. Well, collateral is the property. It's the appraised value of the home or the vacant land. We all know what the considerations are: sales of comps, location, size, condition. We all have stories about appraisals. I have to tell everyone, so I do a lot of new construction. And Cheryl, I'm not telling you this to scare you, because I know you're working with the kids on, on buying a vacant land and hopefully building. But because the prices of the raw materials are going up so substantially, guess what? The appraisals are not following. I've had so many new construction and major rehab appraisals come in light. I've only had one person walk away. Everyone else has made up the difference. They have the ability, the financial wherewithal to make up the difference. But that tells me that the market is not absorbing these extra costs. And what that means for the future, I don't know. Is it going to put a damper on building? I mean, I don't know. Will appraisals eventually catch up? I don't know. I mean, with limited inventory, prices typically go up, right? So perhaps this will help with, on new construction, but we don't know.
Well, I'm hearing, Dana, that the cost of material is so expensive.
It is. So just for instance, so my husband, we're building a home right now. And so we have this very large covered porch. And so we have a deck board on the porch. It's 20 foot long. That deck board a year ago cost $70. Today, it's $130 for one board.
Wow.
So if Ray makes a mistake, or the guy that he's working with, that he hired makes a mistake on that board, guess what? That thing has to be thrown away. That's $130 mistake. So that's just one board. So that just kind of gives you a glimpse into, the prices of things right now. All right, and then we have the last C of underwriting, which is capacity. That's our debt to income ratio. Capacity is the analysis of comparing a borrower's income to their total debt. Basically, does the borrower make enough compared to their debt load to pay the mortgage? Different products allow for different ratios. So this is a surprising little fun fact. FHA will allow for higher ratios. To me, that makes no sense, because most FHA mortgages are first-time home buyers, perhaps with marginal credit and limited down payment. And you're going to strap them into a 50+ debt to income ratio. That means 50% of their gross income is applied to debt. How does that person even pay for an emergency or save any money or pay for health care? To me, that is a really broken model.
Well, remember 2000 and what was it, 7 or 8?
Yep. Okay, so the 4 agency programs. First is conventional, which is Fannie Mae, Freddie Mac. Our maximum loan amounts are now $548,250. Down payments as low as 3%. Credit scores as low as 620. And our seller concessions are dependent on the down payment amount. We'll go into that a little deeper. Then we have the FHA. Our maximum loan amount is $356,000, $362,000. Down payments as low as 3.5%. Minimum credit score is 620. That's investor specific. This is the product I was telling you about, allows for higher ratios. And the beauty of FHA is we can do up to 6% of the sales price for seller concessions. I have clients right now, they have very, very little money available. We've got to go FHA and we have to ask for seller concessions in this market. In this market, we have to ask for seller concessions. I know. I feel kind of bad for them, but it's the only way we can make it work. They make too much money for like a MISTA program. So, and then of course we have VA.
Wait and save, like the rest of us did.
Well, can I tell you that they're my age and they've never owned a home? So
And they think by getting, well, okay, I'm not going there.
nope, don't. I know. And then we have the VA mortgage. You know, the VA loan is the best performing loan out there with zero down. The loans that foreclose the least are the VA loan. So again, we match the Fannie and Freddie loan amount of zero down, 548,250. We can go higher than that, but then they need a down payment. Minimum credit score of 620, no monthly mortgage insurance, which is beautiful. Seller concessions capped at 4% sales price, and the seller pays for the inspection fee. Oh, one thing I want to back up to FHA real quick. FHA, you pay upfront mortgage insurance premium. So the couple I was talking about just a minute ago, they're looking at a $300,000 purchase price. Their upfront mortgage insurance premium is $5,166, which is rolled into the loan, and their monthly MIP is $268 a month. So they're paying twice, upfront and monthly. And the MIP with FHA never goes away. It decreases over time, but it never goes away. So I try not to put people in FHA mortgages. I only do it when I have no other choice.
What was your first part about the VA? You said something about, was it they don't close? What was it about?
Oh, they are the best performing loan. There are very few foreclosures on the VA mortgages.
Okay, that's what I thought, but wow, yeah.
They're the best performing, yep. And then we have the rural development, which is a really cool program, zero down, but we have to be in rural areas. So for those familiar with, I'm just gonna say like the White Lake area, the breaking, the line basically for RD is north of White Lake Road and west of Duck Lake Road is VA or RD eligible. So you got to be north of White Lake Road, west of Duck Lake, and that basically bisects the lake of White Lake right in half. Duck Lake Road will run right into White Lake. It's also income. There's income caps based on county and the family size. This is the only agency program that will allow the buyer to roll their closing costs into the loan as long as the appraised value will allow for it. So for instance, if we have a $200,000 purchase price, for some reason it appraises for $205,000, guess what? We can roll up to $5,000 of closing costs into that loan. We can use up to 6% of the sales price for seller concessions. It's a great loan. And then I offer a rehab loan, the MISTA down payment assistance loan, vacant lot loans, new construction, jumbo, doctor dentist loans, and community edge programs. So I'm not going to go into those. I've got a pickle in my nose. Actually, I want to cover MISTA real quick. MISTA down payment assistance. This is really important, so take note. MISTA has just given us the opportunity to offer $10,000 in their MISTA money, but you have to be within, it's 236 different zip codes in Michigan. I can email that to Jeff and then he can farm that out to everybody. So it's 236 specific zip codes. There's a lot of hoops that MISTA makes you jump through. I tell my borrowers, They're going to make you jump through rings of fire, but I'm going to be jumping with you. So just hang tight. We'll get through it. But if you've got any questions on the MSHDA, it's got to be a first-time home buyer. All adults living in the home must credit qualify. Has to be for your primary residence. There are asset limitations, so you cannot have more than $20,000 in assets, and that includes retirement accounts, 401ks, HSAs, that's health savings accounts, and gift money. And there are limitations on income, depending on where the home is located and the family size. It's a great product. If you have anybody that is lacking down payment money, send them my way. I'd love to help. All right, so mortgage insurance. So this gentleman that I was just telling you about with the FHA, he was very confused on mortgage insurance. He says, well, I want to hire my own insurance company for the mortgage insurance. Why do I have to use your mortgage insurance company? And I said, well, sir, it's not the same as like homeowners insurance. This is mortgage insurance comes into play when you put less than 20% down. And it actually insures the lender in case of the loan default. We will receive a percentage of the loan to help cover potential losses. You guys want to hear another fun fact? Do you know in some cases, you can actually get a lower interest rate if you pay a tiny little bit of PMI? So if you put, instead of 20% down, let's say you put 17% down and you pay a tiny bit of PMI, it could actually improve your interest rate because it's less of a risk. And you know what? I do the math with people. Sometimes that mortgage insurance payment is on situations like that, $13, $17 a month. And then it drops off really quick and it's saving them hundreds, sometimes thousands of dollars a month in or over the life of the loan in interest. Mortgage insurance is a good thing. It really is, because it allows for payments as low as 3% down. The premiums are based on the down payment, the credit score, the loan term. So is it a 15-year, 20-year, 30-year? Is it an ARM? And the property usage type. So is it a primary residence, second home, investment property? As a credit union, our loans perform very well with the PMI companies. So they give discounted rates for the PMI. All right, now basic primer on condominiums. Conventional, which is Fannie and Freddie. Not all condos can be financed using conventional financing. Reason is not all condos meet the guidelines for Fannie and Freddie. So those are considered non-warrantable condos. And I can help with them.
Do you have an updated list? Because mine's kind of old.
I can, it's pages upon pages upon pages. I can send it to you. Yep, I can send it to you.
Is there a website that you can check instead of?
Yeah.
Actually, no, because it's in our all regs. It's in our system. You want like a website for Fannie and Freddie? And then FHA too has a website. Now, FHA approved condos are few and far between. A lot of FHA approved condos have expired. Their approvals have expired with FHA, and it costs so much money to renew it that the complexes aren't renewing, which is sad.
Plus attitude. I've had some where who's ever on the board decide not to because they think it brings in undesirable.
That's lousy.
I know, but you you can't reason with them.
No,
So
it's really
So
loud.
what about selling a condo to somebody with a VA?
Yeah, so VA has now made it a lot easier to get financing on condos. So it's not like it was before. They had to be approved. And there's also, Jeff, VA considered site condos the same as attached condos. So that's been lifted. So there's a VA, I'll get you the VA website too, link for the approved condos. I'm just writing notes so I don't forget. I do offer a class on condos. So, okay. Understanding the differences between pre-qualification and pre-approval, and the trick to knowing if your client really has been really pre-approved. And for the veterans that are here on the call, you know the difference between a pre-qual and a pre-approval. Don't get caught making an offer or accepting an offer as a listing agent with a pre-approval letter that really isn't. And yes, there is such a thing. A pre-qual letter typically has only had credit pulled, and the potential client has only provided verbal information on income and assets. What can go wrong? A lot. Since when does a client know how to analyze their income? They don't know how. They estimate how much they make, and more times than not, what do you think they do? They overestimate it. So unfortunately, potential clients also lie, yes, they do, or they leave out very important information that would only be on a pay stub, like child support or alimony payments. So a pre-approval letter would have uncovered all of this information because the actual income and asset documents have been reviewed and analyzed for accuracy. Same with a self-employed borrower. I will not put my name on a pre-approval letter till I have my tax returns in hand, my self-employed, my business tax returns, and I've analyzed them. Here's the trick you need to know as realtors. This is good for the new realtors. It's super easy to find out if your client's pre-approval letter is legitimate. Ask your clients if they submitted all of their actual income documents to the lender. Just ask the question, make it real casual. Hey, did you submit your income documents and your bank statements and stuff to the lender? And stop talking. They won't know why you're asking the question. And they're going to be honest with you because they don't know why you're asking that question. And if they say no, then that letter is not worth a piece of paper it's written on. If they say, oh yeah, that lender, man, he dragged me through the mud, he made me supply all this, blah, 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 that means that, yeah, that lender's analyzed their income and their assets. So it's a good letter. If you're the listing agent, call the lender. I get listing agents calling me all the time and point blank asking me the same question. Is this a true pre-approval? Did you really collect? Yes.
it is amazing. I've had it happen a couple times. It is amazing the ones you call and they go, well, I actually didn't really pull anything, or I didn't have a chance yet. And you have a pre-approval letter. So that I always call.
Good. It's that kind of behavior that gives us a bad name, because then all the work you guys do as the listing agent and all the work you guys do as the buyer's agent could be for naught. Now, that's not to say that just because you have a pre-approval letter that something doesn't happen, because every now and again something will happen. We do a verification of employment, for instance, and the employer mentions something. Or they lie, the customer has lied and it comes out. They apply for credit. They do a large cash deposit into their bank statement after they've given me the bank statements. And I've told them not to do any deposits. They think I'm not going to find out. And all of a sudden we need an updated bank statement and there's a large cash deposit.
They buy a $12,000 used minivan at 5% plus interest rate the week before closing.
And then they don't qualify. Yes. So
Or a
things
boat.
happen. Yeah, crap happens. But, you know, for the most part, if your client tells you that they've submitted their income and their asset documents to their lender, then it's a good pre-approval. Now, understanding pre-qualification, that's just basically, hey, let's talk this thing through. What do you think your credit score is? Where do you work? How much money do you have in the bank? But then I stop right there. They get no letter from me. This is what other loan officers sometimes will do. I should probably eliminate this slide from this deck because I don't do a pre-qual letter. Pre-approval letter, though, on the other hand, here is everything and this is so important to me. That's why I'm really harping on this. And in fact, you guys and gals, if I am not confident with a pre-approval letter for whatever reason, and there are reasons, I will actually submit it to underwriting. And I will tell that client, I will not give you a pre-approval letter until it's in underwriting. Yes, it will delay the process by about a week to 10 days, but you and I both need to be sure, and I do not want you out shopping if we can't close. All right, what about closing costs? This is for the new agents. So closing costs consist of the following: appraisal fee, recording the deed and the mortgage at the county, title insurance, closing fee, which is paying the notary to witness the signatures, underwriting fee, processing fee, credit report, and then there's a few others: flood certification, tax certification. So ballpark average loan size about 2,400 closing costs with Lake Michigan Credit Union. Our fees, just our credit union fees, are only $920. The rest of the fees are third-party fees. Prepaids consists of the following: 1 year's homeowner's insurance premium that we collect at close and establishing the escrow account. Real estate costs consist of the following: tax prorations due back to the seller, the broker fee, association fees. Between the escrow account and the tax prorations, I typically advise my clients to plan on bringing 1 year's worth of property taxes to the closing. It's just an easy number for them to remember. So if the taxes are $3,000 a year, okay, in my mind, Mr. Borrower, I have to bring in about $3,000 closing for the property taxes, and it will be divvied up between tax prorations due back to the seller, prepaying a tax that's coming due, and establishing the escrow account. That has never failed me. That's a good number for you guys to have too. If a client asks you, well, what about closing costs? Well, I can do that with Lake Michigan Credit Union. Average loan size, they're about 2,400. And your real estate costs, well, about 1 year's worth of property taxes. It gives them a number to think about in their mind. So what about seller concessions? So seller concessions are equal to a percentage of the sales price. For instance, if you ask for 2% seller concessions on a $100,000 sale, you're getting your clients $2,000 from the sellers to be used for their costs. This is where you need to have a conversation with the lender to ask if you can even use seller concessions for the client on their purchase. And if you can, what's the most you can use? On FHA purchase, you can use up to 6% of the sales price for seller concessions. Conventional purchases, it depends on the amount of down payment. Each mortgage is different, so call the lender. I got to tell you, and you guys know this better than me, seller concessions really aren't coming into play right now, are they?
Nope.
Nope.
All right, so we have an executed agreement. Now what? So this is what I need you. I need the fully executed purchase agreement, all addendums. Send me everything. I'll go through and take out what I don't need. Give me a copy of the listing ticket. That helps me originate the loan. It gives me details that I can't find anywhere else. A copy of the EMD, and give me your title company contact information. If you and I have never worked together before, I need to know what title company you work with. Who's your contact person there? Then I will circle back with the client. We'll talk about the mortgage amount. We'll get their interest rate locked in. Make sure that my pay stubs and what have you are not outdated. I'll get the appraisal order, title order, and we get the ball rolling immediately. I don't sit on purchases. Now here's a summary of the loan process. So the buyer will contact the loan officer for financing information, and I, as the loan officer, will gather information needed for the application. And I send that buyer back to you guys, and I copy you on that with the pre-approval, and I tell you to have fun shopping. Then you guys start shopping. So then we will discuss the payments. We will discuss mortgage rates, how much they need for closing. I'll advise them on having credit pulled, moving money around, large cash deposits, everything that, basically a buyer will forget or has no awareness of. And then we go live with the loan, and then it goes to my processing staff who will prepare the loan for underwriting, appraisals ordered, title work ordered. So then, of course, the underwriter looks at the loan, makes sure that all the guidelines are met, sometimes circles back and asks for additional information. Once we get final approval, it goes to my closing department. So I just need you to be aware. What we have done at Lake Michigan Credit Union is we have what's called capacity for closings. We have so many closing slots available per day for my closers to work up packages. Once those days are filled, I cannot put any more loans in for closing. So we get twice a day, we get an update on the closing dates, what dates are available. So for instance, I got a clear to close about an hour ago for refinance. The soonest available date for refinance is the 23rd. So just because I have final approval, I'm clear to close, doesn't mean I can just close in 3 days or even a week. Now, purchases, we close a little earlier than refinances, and refinances, we've got some lockdowns. We can't close on Fridays. We don't close on the last day of the month because we want to allow for purchases. We know Fridays are very popular days for closings for purchases. Of course, end of the month is a very popular time to close on purchases. So we discourage refinancing closings. A lot of realtors just don't understand that they think that my processor can just push a button and it goes to the title company. Well, no, that's not the way it works. We have an entire closing department team that has to prepare the package, and then they send it off to the title company. And then you arrange for wherever we're going to close, at what time, and you let me know, and we get that package out to the title company for closing. Helpful tips for a smooth closing. Listing agents, please order preliminary title when listing the property when possible, so we can determine if there's any liens or anything weird going on. Please don't include any non-realty items on the purchase agreement. Create a standalone addendum for these. No chattel, please. When sending the fully executed PA to the lender, always include the listing ticket, all the addendums, all the disclosures, even the seller's disclosure, that's fine. Copy of the EMD. Again, I need your contact information for the title company. And again, seller concessions are generally a percentage of the purchase price. Check with the loan officer for verification of what that amount is. And this is what I tell my borrowers. No credit inquiries. And you know what, realtors? It wouldn't hurt for you to remind them the same thing. Don't let anybody pull your credit while you're trying to get this mortgage. If the purchase agreement expires, that's not true. I have to erase that. Expires, then back through processing, underwriting, and back in line for closing. That's not true. Give me 30 days. I'm getting them closed a lot quicker than that for a closing date on a purchase agreement. Just allow me 30 days. And if we get it closed sooner, then yippee, yippee. If we're doing MSHA, because it's got to go to MSHA, please allow 45 days after the contingencies are met. There's my
So
contact.
Dana,
Yes, sir.
you don't want to know if we've negotiated repairs after the home inspection, right?
No, I do not want an addendum that says because of home inspection, we have seller concessions of, don't, because that just like, oh, what happened? Underwriter, just give me an addendum that says seller concessions. Don't give me a reason why. I don't want to know. Any other questions?
How much is a large amount? Over 10,000 buyers to have deposited after they've inquired on their mortgage?
Actually, it's a combination. It's their income, their monthly gross income, a percentage. So every client is different.
Okay.
But MISHDA, actually, every deposit has to be sourced.
Okay. Okay, thanks.
You're welcome. Jeff, I think I'd like to do a MISHDA presentation.
I have a question.
Yeah.
Why do we have to ask the lender for the seller concessions?
Because you have to make sure that they qualify, the program that they're using, that they qualify, seller concessions can be used.
Oh, okay.
Mhm.
Thank you.
You're welcome.
I'd like to have a MISHDA class in a condo.
All right.
What are some tips and tricks you can give us for getting our purchase agreements accepted?
Oh, we're asking.
Next one.
I knew you would like that one, Cheryl.
Yes, I would.
Oh, I don't know what the answer is, Jeff. I used to know.
What besides a pre-approval letter, a letter from the mortgage rep that they've already went to underwriting,
Yeah.
and a nice letter from you.
We can do that. So if they've been in underwriting, I will do that on the letter. I will say this line, I will make it very obvious. You guys are out shopping pre-approval, my pre-approval letter, tell that listing agent, call Dana. You need to talk to Dana.
I have to head out. Sorry.
All right,
Bye.
Cheryl, thanks for
Bye,
coming
Cheryl.
in.
So, I'll talk to you soon, Dan.
Okay.
Bye.
Bye. Any other questions?
I have,
Very good.
Thank you. Mohammed?
so for the cash amount, you said that does the buyer need to have the cash for a specific period of time before it qualifies, or how does that work exactly?
So for like their down payment?
Yeah.
So we go back, we ask for last 2 months bank statements. And so let's just say we go January, February. Let's say January, our client has $500 in the bank account. And then in February, they provide me a bank statement and they have 15,000. We can use that money as long as we can source it. If it's cash that they just deposited, we cannot use it. If it's bonus from their employer, of course, we can source it, we can use it. If it's money that they got from a lawsuit, of course, we can use it as long as we can source it. If it was gift from grandma, as long as grandma's going to sign a gift letter and as long as we can see a copy of the check that grandma gave him or her, we can use it. But if it's been mattress money or money that's been sitting in their safe or they liquidated some Bitcoin, that's going to be difficult, to source.
So if it's a gift money, but grandma passed away, they can't use it.
Can't use it. So then what we have to do, Mohammed, is then we have to wait for 60 days to pass.
So 60 days, not 6 months or 12 months.
Correct. 60 days worth of bank. So 2 months worth of bank statements. So now we're
And
going to
on that gift money, what's a percentage that either the parents or grandparents could gift?
it can be, they can gift any amount.
Oh, okay.
So if we see, like my example, Mohammed, was little money in January and all of a sudden big amount in February and it was cash, we have to wait. We have to then ask for March and April's bank statements, which means we can't look at till May because we look backwards. You see?
Thank you.
Yeah, you're welcome.
So just telling them that the crop came in and was distributed, it's not going to work. Huh?
Nah, that doesn't work. Yeah. And I was being facetious about Bitcoin, but if they have an account and you can see it in writing that they had Bitcoin and they liquidated it and you can see the paper trail, then that's not a problem. I think we're going to see it more and more.
Yeah, what do you think the interest rates are going up? Is there any indication of when this is gonna stop, or?
Um, I tend to be more on the contrarian side of the market. And I have a feeling that things are going to get a little dicey, but then the Fed's going to intervene. Again, they want rates to go up too quick. So it might end up in the mid 4s, and then they'll intervene and calm things down again. But all that's doing is kicking the can down the road. Eventually, it's going to be out of control.
What do you mean out of control? Like really high interest rates?
Well, I mean, potentially, yeah. Look at what happened in the 70s. My first home, the interest rate was 10.5%.
Right.
In the early 80s. My brother-in-law was at 14% in I think 1979 or 1980. Well, can you imagine a 14% interest rate on a mortgage? But then again, he was probably getting 8% on his savings account. You know, so
Well, I remember when they were in the 9s.
yeah.
Oh, easily remember when
Oh,
they
yeah.
were in the 9s.
Oh yeah. So you know,
Yeah, on my first house in 70, let me see, 75, my interest rate was like 3% and a little shy of 3%. And then 5 years later, when my sister-in-law got married, 81 or so, they were 11% and they bought a house.
Mhm.
But very few people were able to do it at that time.
Yep. And it was not for a long period of time, you know, a handful of years, maybe tops. I mean, gold, remember gold? Do you remember that? When gold was just outrageously expensive? And I mean, you see it's happening in the market. Interest rates really should be higher, but the Fed has intervened to stop that from happening. To answer
You
your
said,
question,
what's it right now, 3 what?
3.125.
Okay. Okay.
I had a young man yesterday, he's building a home, but he needs an end loan. He doesn't need a construction mortgage. Builder told him end of July, the home would be completed. It's conforming loan amount, it's 20% down. He wanted to lock in the interest rate. For him to get 2.75% to lock through the end of July would have cost him $9,700.
Mm-hmm.
He said, Dan, I want to sleep on that. I said, I don't blame you. He emailed me this morning and said, we're not going to do it. We're going to wait. I said, I don't blame you. That's a lot of money.
Right.
Any other questions? Well, I want to thank everybody for being here, and I'll be offering some different classes. So you have my contact information. I'm here if you need me, okay?
Okay. Thanks.
Thank you.
Take care.
Bye.
Have a good day.
You too.
Bye.
Bye-bye.